Say nay. All right, motion passes. Move down to the regular agenda. The first item is the financial report. And for this, we have Karen, our finance director.
Hello, everybody. I'm just going to be presenting Kindred's financial reports because I overcommitted this week. So let me pull it up. Okay.
James, do you want to introduce Karen? I don't think the board's all familiar with
For
Karen.
everybody that is not aware, I hired a financial person, an accountant as a contractor, and this is Karen Sabilio. Karen Sabilio started maybe 3 weeks ago, Karen?
Yeah. Yep.
3 weeks ago. She's helping us get our reporting and finances to where we can really understand what's going on. She's been an asset so far. This is Karen. Karen, this is the board.
Hi, Karen.
Hi.
Hey, Karen.
Good to see you all. All right. So for this financial report, one of my main goals when I got on was to make sure that you guys could look at something by the time you would meet, and for the previous month that you should normally be looking at. We had some really good cash inflow for January. I can't say that it's the same for February so far, because I'm still learning LCS also. But based on our budget, we seem to be in a pretty decent place. I've asked Kindred to take the annualized budget and split it by 12 months. So we have here, you can see our grants. We received large grants in January, and then our biggest expense remains payroll. So I think once I get a little bit more familiar with LCS's ins and outs and their finances, I did note that there was an expense this month from M Cubed, I'm assuming for cameras, and that'll be a capital asset. So I would just make sure that everything is going where they need to go.
We have access.
Karen, did you put these in the financial statements folder?
This, I saw it in the, someone put it in there. I think you did, Charlie.
I put something, but I'm not sure. Was it all these? I don't remember seeing the budget
Yeah.
versus actual.
It's on the last page.
Okay.
If it's not, let me know and I'll put this in there.
Okay. Well, it should be in there then.
Okay. But yeah,
Basically, Kindred notifies us once they've posted it, and then we pull it down from a document library that they maintain, and we can push it into our Google shared drive.
yeah. Yeah, so I think we're on track there. I will say that I spent most of my time since we last met on Monday looking at the financial policies for Lawrence, and I've added comments in there. Would you guys like to look at that? Or we
Sure.
can talk about that another time.
I think it might be helpful to hear a little more about where you were thinking we should go with the financial policies.
Okay.
So is that, sorry, I wanted to ask you a quick question. Is that from the draft policy that we had?
Yes, yes.
Okay.
I haven't changed anything. I just added some comments, but I think it would be helpful to have something in place that we can share with Kindred, that they're aware, um, and figure out how we're going forward. I know one of the biggest expenses on the budget that was a concern was paying for Kindred services. I've been communicating with them to try and get that down by doing a lot of the entry myself. I'm still trying to get a clear picture of what I'm able to do. But my thoughts are, because we've been in this firefighting mode, I don't, and I've shared this with James, I don't feel comfortable that there are debit cards for our operating account. And the reason being is normally we would have, in my experience anyway, we would have like ACHs, we would expect those to come out of the account, and the checks, we expect those to come out of the account. And then if anybody needed to buy something, under $100 or less, or they needed funds quickly, it would be with access with a credit card. One thing that I have found is when I was talking to Melanie, we have Applos, but we're not using it. And I didn't think it would be a good use of my time to get everything into Applos and get it into a place where I could share reports with you, because I think that would be duplicate work, and I don't think that's worth LCS's time either. But one of the main draws to having Applos is those PEX cards that Melanie obtained. Right now, there's only 5 free, but we're paying, again, $99 a month for Applos just to get those PEX cards. And I feel that if we had credit cards, we still have some sort of monitoring in place, but we're not paying an extraordinary amount that could be used elsewhere for the shelter. So that was another thing that I'd like to incorporate in our financial procedures.
And Applos is the accounting software.
Yeah, Applos is the accounting software that's supposed to be great, but since we don't do our accounting in-house, and since we've already engaged with Kindred for this next year, I just don't think that it's necessary to continue paying for Applos for essentially the PEX cards.
Correct. And then just, I think, James, you had told me the estimate from Kindred. So they initially gave us kind of their hourly rates, but we asked them to look at our historical actuals and tell us what they imagine we would be paying throughout the whole year. I think it was, you said 21,000. It was something around 20,000. So, and that's not an unreasonable amount for accounting services, but it helps us to understand, like, it does cost us when we outsource it. And I think what Karen's kind of trying to wrestle with is, what's the right arrangement? Do we continue that, or do we bring some of this in-house? And it sounds like some of the work she can do. So instead of them billing us hourly for certain tasks, she might be able to do it, which would actually reduce our costs.
Yes, exactly.
So we might actually not spend 20,000 on accounting services if that's the case.
And one of the things I've asked Karen to do is to continually evaluate where we're at, and then once you have a good handle on where we're at, kind of give me some recommendations on what are some of the options we could come up with. One of the things we both see is the PEX cards. People might have PEX cards in different departments, but there's no money on them. But they have to be funded each individual time that they ask to make a purchase. So when that happens, Melanie has to go on the computer and put money onto the card, which defeats the whole purpose of having a budget and being able to predict how much money could be potentially spent in any period of time. So one of the things we just got signed into the banking system, and we're going to get our credit cards. And then once we do that, we'll look at a system to have credit cards for people that make purchases and have them have a limit based on the budget. And so we'll know they can't spend more than this amount in any period, and we have a better handle. But it also frees them up to buy some of the things that they have to buy anyway. Like I just got a request that somebody needs a check to purchase an ID or a birth certificate or something like that. But we have to write up the check every time they need that. And if they had their credit card, they could just do that. So that's what we're working towards. I think we should have that done by next board meeting. We should have at least have ordered credit cards for the people and have identified a basic budget for each department based on what the funding we have.
Karen, are you thinking that we'll have, the exec committee will have some policies that are ready for review and we can get that on our board agenda for next month?
Yes,
Okay,
yes.
that's good.
Because I also, with that, one of the concerns had been the approval process. So if there's, I could incorporate in our financial policy, if the amount is like under $50, they need to get something accomplished for a guest or for the shelter, they could go ahead and do it. It would be under review, but for anything larger, there would need to be some kind of written evidence that approval has been obtained, and then we could attach that to the receipt. Right now, the way that the purchase requisition process is going, it's messy. I'm not a fan of the spreadsheet that was shared with me, but I do think that perhaps splitting off the purchase requisitions from like direct assistance to just general shelter needs should make it a little bit easier for us to manage. And ideally, then we could also put some sort of process in place where the executive committee could quickly see what's being requested and approve the purchases, and then we could have someone just go in and take care of them. So, yeah.
If I remember correctly, wasn't there a problem with people just swapping out cards, someone say, oh, here's a, go around. Are we gonna add that to the policy of limiting authority on who can spend one on what card? And
I think the problem with that we see was that the only card that's there is directly to the main account.
got it.
And so that is a problem. There's no
Yeah,
buffer,
that's
there's no
true.
buffer between
Yeah.
what's purchased. It could, there has to be some type of buffer. So that's the
Yeah.
problem.
Here, let me share with you, because I did look at the activity for February so far. Hold on. Oh no. Are you there?
Yep, we're still here.
Okay, sorry. And then you can't see my screen anymore, can you?
No, we can't.
Okay. All right, so let me get this. All right, so all of these,
Can you make it a little larger?
yeah. All of these that I've highlighted, they're like authorizations that have come in. They're zero, but it's concerning to me because it's an easy way for fraud to happen, is just direct access to the account. And being that a lot, well, 100% of our funding goes into that account, I don't feel comfortable with having a debit card there. These are small purchases, like this is Ace Hardware, Iron Mountain, I think that's an automatic charge that happens monthly. So I'm still trying to get a grasp on what we are paying automatically. That way we can get it on like a cash forecast. That has been my goal, is to have some sort of cash forecast. And I think with people having access to credit cards so that they can get shelter business done, sharing with them, their spend for the week might be helpful to make sure that there's not errant spending going on, or they're just wildly, yep, we need that, or yeah, the shelter needs that too. I think I just don't feel comfortable with a lot of these just direct debit purchases from our bank account.
All it would take is somebody to compromise that
Yep.
account, and they have
And-
access to everything.
And the debit card is different from the PEX cards.
Yeah.
Okay.
Yeah.
So the PEX cards sound like you have a lot of
I think-
control.
Yeah, I think, aren't the PEX cards authorized from the debit card?
The PEX cards are, so they're prepaid. And so the way that that works is it gets funded out of our, it gets funded out of the operating account once a month by ACH. I think Melanie has one going through for $1,000. And then instead of having the cards preloaded, it requires approval right now. So there's a couple of hurdles to get through for someone to be able to spend. And I don't particularly like the length of time it takes for someone to be able to use those cards, not to mention that they aren't living with the person that uses it necessarily. My understanding last time when I talked with Melanie was that she retains all of the PEX cards. In a control sort of way, I kind of understand that because then it forces the person to have to bring the card back with the receipt. I don't think that that's been happening. So, you know, and again, with the whole $99 fee that we're not utilizing the accounting software, I just I don't see that as a very efficient process to get shelter business done.
So you said there's just one account, and that's with Bank Midwest, right? Is there an option for us to consider getting a money market account within the Bank Midwest, and that works as a separate checking? I mean, it is market checking, but you use it as you use debit or credit, and I would think safer to have a larger sum in the money market, which also accumulates yield to date or yield value or whatever. I'm sorry, I just got here, but it accumulates interest, but possibly, but you know, then they have another funneled smaller account that works for the day-to-day operations.
Yep.
That's always considered, or is that something you're looking at to do?
You know, I still think having a different account perhaps.
Yeah.
I'm sorry. Sorry, Karen, I was saying, I don't know,
I'm not sure if it would
If we-
increase interest, but
okay,
yeah, the money market, it would be a separate account that would have a smaller ownership, and
I understand
Yeah.
but I didn't know if we could be in an interest bearing account. Since we're
yeah.
kind of grant funded and we're a nonprofit.
We definitely can.
Can?
Yeah, the question really is, we don't have much in reserve. So I don't know how much we could really
Okay.
move over to a different account.
Yeah, but I mean, honestly, transfer process could be a 2-day, 3-day transfer process. And, you know, I mean, I think most of those money markets are now probably paying 5%.
Five to 5.5.
Yeah, that can make a difference in a monthly basis for, we've got $500,000.
We'll look into it.
So,
And you're right, Chuck, just a couple of days to, you know,
Wire those funds.
if we know that we're gonna need X dollars,
there's a
That's
basic
the-
payroll, right?
you can pull X dollars out of that and move it into another one, and then you have immediate access to that, but you still have the brunt of it over here. Very
Yeah,
good.
I'm glad that you guys brought that up too, because in my experience, when I've helped a couple other nonprofit clients, and they invested in CDs. And now I know that LCS isn't in a place right now where we can confidently say that, yeah, we can invest this money. But I think it would be wise to start thinking about that now, especially as like an income driver. I know that we don't have someone that's not, we don't have somebody that's dedicated to raising money. Please don't ask me to do that because I'm strictly an accountant person. I am not a salesperson and I'm not someone that raises money. But yeah, I do think if we should utilize the resources that we can. And Midwest might even have a money market account that we could utilize. If it's external, then yes, it's going to take a couple days. But if it's within Midwest, I think we could be doing a transfer same day.
In a dream scenario where we get into the position where we talk about investment, we should lean on our partners at the community foundation. You can set up a fund there that they'll invest through their portfolio. So it's a pretty easy way to set up a fund there that, you know, they make really, you know, good financial investments on their decision making. So it's a good, easy way to.
Got a question having to do with the balance statement. Just curious, and I don't know, so we've got, our largest asset is what we're listed in the property, the building, 3.8 million. And I'm just curious where that number was derived. You know, it doesn't appear that, I mean, it's not far off from what the county is valuing.
Right.
Property is maybe 200,000 off, something like that. But I don't know where that amount, it's been there for a couple of years, you know.
Yep.
It hasn't changed
Yeah.
for years, so I don't know.
I've wondered the same thing, so I don't know. Is that something you can help us understand, Karen?
Yeah, yes, I'll get with Kindred, because my understanding is that Kindred maintains their fixed assets listing. I know that I've not found anything on our Google Drive that has that, but yes, I think it is important for us to know what that is. And especially since one of the draft policies is that anything over $1,000 is capitalized. I don't agree with that amount, but I do think it's important, especially since I had mentioned to you guys that I think with the new security system going in, that would be an asset. And then some of these improvements that are being made to the shelter, those would also be capitalized, and they should be.
Okay. Can you speak a little bit about your hope for how we go about doing the regular approvals of our financial statements? I know we talked about kind of putting on the approvals for 2023 for a little while longer, but going ahead now, since we've got you on board and we got the January ones in front of us, that we could start tonight to actually approve our monthly financial statements.
Yeah, so I asked Melanie about that to see historically what had been done, and especially since it was brought to my attention that most, if not all of us, are very new to being part of LCS. And she said there was something like a board consent. So I guess the fact that it's on the agenda makes it, but the other part of it is a lot of you are only just seeing it. So to see it now and then be like, oh, yep, we're approving that. I don't think that's right. For me, and I think perhaps for all of you, having something in writing saying, yep, we reviewed these financial statements and we can attest to the materiality, all of that would probably be best. But I defer to you guys in terms of how we want to do that. Because again, that brings up a good point about putting that into our the draft financial policies that we would be discussing next month. Right now, it just says that the executive director is the one that would be approving the financial reports, and that the board approves the annual audits, but they review the financial reports periodically. Nothing about approval, but I know we talked about that before. And yeah, like I think we could put a system in place where it's officially everyone on the board has reviewed the financial statements and understand what's going on with them, and can attest to them, I guess.
Okay, I think maybe then, since we haven't had those policies put before us yet, we just defer this until we have policies set.
Okay.
And from that point forward, then we would follow whatever that policy is.
Okay.
And then the 2023 financial statements, they're all in the folder. I think maybe there's some discussion we can have with Greg when he does the audit about how we might engage him with the audit for 2023 to think about how to maybe do more than just a standard audit, but to ensure that we are confident that our 2023 statements are accurate. So I guess with that, there's nothing really to vote on here tonight. So
Okay.
we appreciate your taking this on and for all the clarity you're providing us.
I'm sorry I couldn't provide more.
No, you're doing great.
I'm going to be honest, this is my first kind of foray into presenting a report because I'm like, here it is, you know, but
Yeah.
yeah, I do appreciate any questions that you have for me. I'll make a note to get with Kindred on that fixed asset listing, and then hopefully I can have that presented for our next board meeting.
Okay. All right. Thank you so much.
Thank you.
Thank you, Tim.
All right. So next on our agenda is the annual audit for 2022, and Greg is going to present that. Greg, do you want me just to share my screen?
Yeah, if you could, that'd be great. Can you guys hear me okay?
Yes, we can.
Okay, perfect. So, Charlie, I'm gonna do just like we did, for the, Finance Council. We're gonna go right to that first page, right after the table of contents, and I want to explain, for the group, kind of what your responsibility is, what my responsibility is, the results of the audit, and then we'll get into the numbers. If anybody has any questions, feel free to stop me. We can talk through things. If you want to have questions at the end, that's fine. I'm going to hit the high points and the big changes, and then we'll go from there. So does that sound good to everybody?
Sounds great.
Okay, perfect. And then Charlie, I can't see your screen, but that's okay. I've got the report in
Oh.
front of me. So as long as everybody else can see it, then I'll get going.
Maybe I tried to do full screen. Maybe that messed it up. Can you see it now, or I just haven't shared it maybe?
I don't see it on my end, but again, I'm okay.
All right.
I have the report.
No,
So
it's on me. I just haven't shared it. Thanks for calling me out like that.
so
All
Charlie,
right.
I'm going to have you go down 2 pages for me.
Let me go back to full screen.
Perfect. So this page, for people who aren't familiar with the audit report, or reading them, you get your audited financial statements, but at the front, it's called the auditor's report. And that's where it details out your responsibility, my responsibility, the opinion, and some other important information. A couple of years ago, they changed the layout of this report, where they put the opinion first. But all the wording that's in here is standard wording. We don't get any choice over it. The choice we get is the opinion we need to issue, and we've done that. So right at the top, just getting into it, the opinion is first. Right now, the financial statements, the way they sit, present fairly, in our opinion, based on the information that we gathered and the audit procedures we performed. So that's the important thing. Right below that, it talks about basis for opinion. We conducted our audit on auditing standards that are generally accepted, just how everybody performs their audit. Below that, it talks about basis of accounting. And so we talked about this a little bit in the finance meeting. Your basis of accounting is a modified cash basis of accounting, which is not GAAP. GAAP basis is accrual basis. There's nothing wrong with the basis of accounting that you've chosen. It's an acceptable standard. It's just not GAAP. And so the big differences between GAAP and your modified cash is things like accounts receivable, which wouldn't necessarily apply to you guys, accounts payable, some other things. So if you presented your financial statements on an accrual basis, there would likely be differences than what you're going to see in the financials that follow. That being said, you've always, at least as long as we've been doing it and prior to us, you've always used the modified cash basis of accounting. Again, that's fine. There's nothing wrong with it. It's just a little bit different. Right below that, it talks about responsibilities of management, and there's a big paragraph there, but in a nutshell, what it's saying, or what it's trying to convey to all of you, is that as a board, these are your financial statements, and ultimately you guys are responsible for them. So if the financial statements do not look the way you want them to look, if you feel they're misleading, if there's disclosures you don't like that we have in there, or disclosures you would like to add, we need to talk about that. And before you approve this audit report, we need to make those changes. Depending on the changes you want to make, it may modify our opinion. So if you decided, hey, we don't like the cash number that you have in there, we feel it should be twice as much, we're obligated to change that, but then we're going to qualify or issue an adverse opinion because it'd be misleading. If there's a required disclosure that you don't like and you say, hey, we don't like that, we don't want it in there, we will pull it out. But again, it's going to modify our opinion depending on the degree and severity of that. If there's additional disclosures you want, where you go, hey, we want to put a disclosure in there that said, that talked about how many guests we served this year. Absolutely fine. It doesn't impact the financials. As long as it's not misleading, we can add that. So again, these are your financial statements. They're not mine. It's important they look the way you want them to look. So right below that on the next page, it talks about auditor's responsibility. And again, all standard wording. But in a nutshell, what it says there is that it was our job to gather audit evidence, look at information from you guys, compare it to the numbers, propose possible adjustments. But ultimately, our job was to issue an opinion on whether or not we feel the financial statements present fairly or not. And we've done that. So again, they're not my financial statements. My only job technically is to issue an opinion. And we've done that. And again, the way the financial statements sit currently, we believe they present fairly. So any questions on what we would consider the auditor's report itself? Okay, well, I'm going to keep moving. Charlie, if you'll go down to the statement of financial position. Perfect. So for those of you in business, not for profits, this is your balance sheet. It's referred to as a statement of financial position. So you had some big swings from 21 to 22. Big changes in your asset section. Cash and cash equivalents dropped by 275,000. Property and equipment dropped by 73,000. That drop in property and equipment was a result of depreciation. You didn't dispose of any property that I'm aware of. Those are your big changes in your asset section. Down in liabilities, notes payable decreased by 14,000. That was due to principal payments. Nothing unusual there. So you have a limited balance sheet, and that's fine. But those are the accounts that changed. Your change in cash was a result of operations through 22. And we'll get into that and why cash dropped here as we get into the following pages. So do you guys have any questions on your balance sheet? Okay. We're going to go to the statement of activities. Statement of activities is basically your income statement. And again, I'm going to hit the big changes. Stop me if you have questions. Contributions. Contributions went from 486,021 to 243,022. So it was a drop of 243,000. Your grants decreased by 430,000. Your fundraising and other events is overall comparable. So your total support and revenue actually dropped $667,000 from 21 to 22. And that's obviously a big hurdle and impacted your cash results significantly. Down in expenses, program services, that expense actually decreased overall by about $208,000 from 21 to 22. Management in general decreased 3,000. Fundraising went down 8,000. So your total decrease in expenses was 219,000. Your revenues over under expenses from operations is basically your net income. You had a loss on the year of 332,000, which was a decrease from the prior year of 448,000. So despite the reduction in expenses, obviously your drop in revenue exceeded that. And that contributed to your significant drop in cash. Any questions on this page? This page, this got changed here, 4 or 5 years ago. Program services, management, general fundraising. We'll detail those expenses here on the next page in the statement of functional expenses, but they're required to be grouped the way you see them now. So we'll get into that detail here on the next page. Charlie, if you'll go ahead and go down a page. Page 5. This is only for the year ended 2022. You would have to go to page 6 to see 2021. I've made notes of the big swings between the 2 years, but for you to look at them yourself, obviously you'd have to lay those 2 pages out right next to each other. Again, fundraising was comparable with the prior year. Management in general was comparable. Program services is where you saw a decrease of about 208,000 in expense from 21 to 22. But within that column and that category, there were several expenses that had significant increases and some that had significant decreases. So I'm going to go through those now just so you're aware of those and they jump out to you. Salaries and wages, that account actually decreased $58,000 between the 2 years. Payroll taxes is down 8,000 from the prior year. Employee benefits is actually up 18,000. The bulk of that was health insurance increases. Direct assistance ended at 197,384. That was a decrease of 56,000 over the prior year. Program expenses was down 26,000 over the prior year. Your insurance was up 14,000 over the prior year. Your vehicle expenditures was up 28,000 over the prior year. Staff development was down 7,000 from 21 to 22. Professional services actually decreased $47,000 from 21 to 22. Utilities was down 18,000. Program supplies was down 75,000. Repair and maintenance was up $23,000 over the prior year. Depreciation, I believe that increased, didn't make note of it. It decreased about 13,000 over the prior year, but that's a non-cash expense. That has to do with your fixed assets based on their useful life. So overall, total program services come in at just over $1.5 million, which was down about 208,000 from the prior year. But those were the accounts where you saw some big swings. Again, some up, some down. Obviously, there were some efforts to try and reduce expenditures throughout the year as revenues were not coming in where you'd like them to be. So, any questions on this page?
Can you speak a little bit about, I'm sorry, yes, can you speak a little bit about depreciation? I'm looking it up, but could you explain it in a term that's pretty accessible, just like you've been explaining the rest of these revenues, please?
I'm sorry, Charlie, could you repeat that question for me?
So, she was asking if you could explain a bit about depreciation.
Oh, sure. Yep. So, fixed assets, when you purchase them, they go on the balance sheet. So it's not like a normal expenditure. Under accounting rules, because those fixed assets have value and benefit of use over multiple years, they require that it's called capitalizing them. That's what Karen referred to a little bit when she was talking about the depreciation schedule. But we capitalize those assets, we put them on the balance sheet, we put them there again because they have future value. And then the accounting rules, depending on the asset, assigns it a useful life. And that useful life may be 5 years, 7 years, 10 years. It varies, but they're all standard. And what they have determined is that computer that you purchased, it's going to have benefit for the organization over 5 years. And so there's different methods of depreciation. Straight line's probably the most common. And so what that would mean was we're going to take 1/5. If that useful life is 5 years, we're going to take 1/5 of the cost of that computer and we're going to expense it each year. So even though your cash output all happened in 1 year when you purchase that computer up front, they're trying to match the benefit of that computer and that expense of that benefit with the year in which the computer was used and served the organization. So we spread that expense out is what that is.
So this expense is, I think, for the property?
It would be for your building, your equipment, vehicles, any of your fixed assets.
So what I think I understand is if we paid for those as a service, not as an actual purchase, it would be costing us about $145,000.
Yeah, collectively, think about it this way. If all your assets had 5-year useful lives and they were all purchased at the same time, and the cost was 145
times 5.
Your total cash output would really be about 725,000 in that first year. And then you're going to take 145,000 each year over 5 years to recognize that expense. Because again, you're going to use those assets over multiple years. The IRS has requirements on capitalization policies. Most organizations also set their capitalization policy limits. There are some restrictions within what you can do there. Some organizations set it super low, some set it higher, but basically in a nutshell, if you're purchasing a capital asset, you throw it on the balance sheet as a fixed asset, and then you depreciate over the life of that asset.
Thanks for explaining that.
Does that help?
Christina, does that help?
Yeah, that does.
Okay.
Thank you.
I've got a specific question on that depreciation and then a general, am I reading this correct question? So under the fundraising, we're listing $7,000 of depreciation associated with fundraising efforts. Do we have any idea of what capital assets were devoted to fundraising? And then the follow-up question on that if I'm reading this correctly, it's saying that in 2022, we had $28,000 of revenue with fundraising efforts and $36,000 of expense with fundraising efforts.
Let me look, hold on, let me go up a page to look at your revenues. I'm sorry, revenues should not be on that page up in the top left-hand corner of
Oh.
that page that's on that screen. That needs to come off.
Yeah, we already,
So my apologies about that. We talked about that during the finance council meeting, and I need to pull that. Your fundraising revenue, yes, you are correct. You had fundraising revenue of $28,000. Your fundraising expenses, as they sit here, are 36,000. However, organizations are allowed to allocate the expenses how they see fit between these three categories. Depreciation is a perfect example. It's not necessarily associated with a specific asset. It could be, in this case, and I believe I'd have to go back and look at the work paper, and I can get an answer for the group. I don't have those in front of me at the moment. Most organizations will allocate based on percentage. And so salaries and wages, for example, they may go on average, we feel that 3% of our total salaries and wages should be allocated to fundraising. So they put that there. It's not that they have actually tracked that, or in your guys' case, that $6,708 were actually spent by staff to do fundraising. And that same thing would have happened with depreciation. And I believe that's how you guys have done that in the past. I would have to go look. Most not-for-profits that we deal with will allocate that way, where they have percentages and then they decide how much they want to associate with each category. It doesn't have to be done that way. It can be more specific. There are some not-for-profits who go through all of their expenditures and earmark them and go, no, this goes to management in general. This goes to programs. This goes to fundraising. So you have plenty of wiggle room there. If you don't like that allocation, you're more than welcome to change it, especially if you don't feel like it should be allocated that way.
Karen, I see you kind of nodding your head. Do you have any thoughts on that?
Well, I just wanted to add to, just Greg mentioned useful life. That doesn't necessarily mean that the asset that we have on file isn't useful anymore, because there's often times where assets get capitalized and then they fully depreciate, but there's still an asset. There's still some kind of value there. So I just wanted to add that. The other thought that I had too was, it took me a minute because I was thinking, where is he finding the 7,000? I see it now. So with the allocation amounts, we think about the activities of the shelter. That's what he's referring to as the percentage wise. So if program services mainly driving the shelter business, then we want a majority of the allocation for our fixed assets to be depreciated there. Then the next bucket would be admin or G&A, and then the fundraising aspect too. I think I'm not familiar with how often we run fundraisers, so perhaps that allocation could be lower. I think that's something that we could discuss.
That could be anything from a fundraising mailer to, I mean, that could be it could be the credit card processing service to accept online donations. It could be a whole slew of things. Right? And under that, yeah.
Well, not in terms of depreciation, because depreciation is directly related to our fixed assets. So let's just say, I think a perfect example was, I'm in tax, business use of home. So you live in a home, but you have an office, but you can expense the percentage of that office that's part of your home with your utilities and such. So that's kind of what we're doing here with the fundraising and the fixed assets. We're saying, fundraising happens on premise, and perhaps 3 or 5% should go to fundraising, and in terms of that bucket getting a depreciation designation. Does that make sense?
So it's 4.5% was the allocation. Any other questions?
All goes into that heading direct assistance. What,
Direct assistance would be anything that we directly purchase for guests. So a lot of what we buy are anything that they use, like one of the
hygiene products would
anything
be an
that we have to
example,
buy
would be an example.
to driver's license or birth certificates. Anything that we purchase, medication, we buy a lot of over-the-counter medication.
Gotcha.
This specific needs.
I believe that what Melanie had explained to me once was the direct assistance expenses are really kind of matching up with a direct assistance revenue stream. So it's like grants that are allocated just for direct assistance, then they get expended. So it looks like in 2022, there's a lot more funding available to provide direct assistance.
There's a lot of cool.
Sure. Yep. I think we're ready to move on. Greg, do you want to?
Yep,
going?
no, perfect. I will say that, how you guys have allocated, and again, I don't believe we changed anything. They're ultimately your financials, so we weren't made aware of any changes, but you guys have more allocated to your fundraising category than most. There's a lot of expenditures in there, staff development, things like that, Karen, if you want to go through it, or Charlie, or all of you for that matter, we'd be happy to go through it with you. Certainly as some of you get more familiar with the organization, I fully expect that some of these percentages would change. But the one gentleman's comment, 28,000 in fundraising versus 36,000 in expense. At first glance, it would seem that fundraising is a money loser. Based on how this allocation happens, it appears that way, but I don't know, and I can't say for certain that that's the case. You very likely made money on your fundraising. It's just the way these expenses are allocated. And again, there wasn't anything wrong with how they were allocated. That's how it's chosen to be done. But like, insurance, for example, do you really need insurance allocated to your fundraising? Maybe you do, and maybe there's direct expenditure there with your events, but likely not. Or your utilities, for example, you have more allocated to fundraising for utilities than you have for utilities going to management in general, and it seems unlikely, as we sit and we really do a deep dive into this. But again, nothing technically wrong, but probably where this could be polished and a little more helpful for you guys. But obviously the bulk of the activity is sitting in program services. It's been comparable with the prior year, and you had some big swings. So any other questions? Are everybody good to move on? Okay. If you will take us to page 7, please. Page 7 is your statement of cash flows. So even for people in accounting, sometimes the statement is difficult to read. For those outside of accounting, it's certainly difficult to read and understand. So I'm going to hit the high points and try and explain it. But again, if you have questions, please stop me. And I'm happy to try and explain it best I can. The 3 main points with the statement of cash flows, or what the intent of the statement is to show you where your cash was used or made during the year. It's broken down into 3 sections: operating, investing, and financing. Operating is obviously the main activity of the organization. So in a nutshell, your operating activities, you technically used 178,000 in cash. In the prior year, you had positive cash of 405,000, meaning you made money or you increased your cash. So it was a decrease in overall operating activities from a cash perspective of 583,000. And again, the bulk of that had to do with your drop in revenue collected, contributions and grants. So no surprises there. Down in the investing section, the purchase of fixed assets is categorized in this section. In the prior year, you used $257,000. In the current year, 2022, you only used $82,000. So you had a positive swing of $175,000 between the 2 years, but overall, you still used cash of $82,632. Down below that, we have the financing section. For you guys in the financing section, it's going to be that debt service that you have. It was comparable with the prior year, but you used $14,420 for your debt service. So your overall net increase, decrease in cash and cash equivalents, your cash decreased by 275,465 in 22. This was a decrease of 408,000 overall if you compared it to 21. But your cash started at the beginning of the year of 458,000. At the end of the year, it was 183. Obviously, the financials that Karen presented currently, your cash is up significantly and sitting in a much better position. So 22 is obviously a rough year. So any questions on this statement?
I guess is part of your audit process, for instance, if we're looking at the cash and cash equivalents at the end of the year 2022, is part of that process actually looking at a bank statement that you have as a physical document?
Yes, yep. So the audit process for cash, if cash is deemed to be a significant audit area, in your guys' case it is for most organizations, we actually send confirmations to the bank. We obtain copies of bank statements, bank reconciliations, and we tie it between all three of those to your what we call your trial balance or your balance sheet. And so we send the bank confirmations independently to avoid any fraud and somebody trying to manipulate a bank statement. So we get that from the bank. We make sure that it agrees to the bank statements that were provided, because the bank statements come from the organization, and in some fraud cases, people have actually manipulated those. The bank recs, we look for it, we foot them, we look for unusual activity. There's some analytics that go into it, some different things that we look at behind the scenes, but overall, that's how we tie it out. One thing to note, I guess, while we're talking about this, for those of you that aren't familiar with it, an audit is a very good thing. We look at a lot of things. It is not a fraud investigation by any means. You can have an audit done and have fraud that occurred, and it will not get caught necessarily by the audit. That being said, if there are things that are unusual, fraudulent, or odd that come to our attention, we're obligated to bring it to your attention. And so nothing concerning your cash or anything else for that matter come to our attention during the course of this audit. But I've been part of fraud investigations. They're very expensive and they're very detailed, and they dive into a level of detail that we don't come close to in an audit. Or audits would never be affordable for most organizations. So we follow the standard rules. And again, if we have the option of adding additional procedures if we need to, they're called extended procedures. We didn't feel anything was necessary when it comes to the cash section to do that. But yes, so we do look at the bank statements.
Any other questions? Okay, what's next, Greg?
Let's see, we're going to go into the footnotes, but I'm going to jump ahead. Page 8 and 9 of your footnotes, that talks about your accounting policies. There's no new accounting policies that come to our attention. This is really information for the reader of the financial statements to learn a little bit about how you guys do some accounting and what your policies are. It's all fairly standard, and it's typically what you see in a footnote. I'm going to have you go to page 10 though for me. So the point of the footnotes, for those of you again that are not familiar with audit reports, is to supplement those main financial statements and provide some extra detail and attention and information that you may want that you didn't get from the main financial statements. So footnote 2 is a perfect example of this. Footnote 2 is additional detail of your property and equipment for both years. If you were to look on the balance sheet, or I'm sorry, your statement of financial position, we only provide one number, and you would have only seen that net number, that total. This footnote provides that additional detail, so you can see what goes into buildings, what goes into furniture and office equipment. It provides you a total fixed asset dollar, and then what's called accumulated depreciation. Accumulated depreciation is all of that depreciation expense that's happened over multiple years prior to the current year and including the current year that relates to that. So in your guys' case, over the years, you've purchased 4.4 million in fixed assets. Also over the years, related to those assets based on their useful life, you've expensed 1.1 million on your financial statements. So it gives you a net asset value of 3.2 million. And to Karen's point again, it's not that you don't have 4.4 million in assets per se. You do. It's just based on accounting rules. we say that there's really only 3.2 million left in value. So. Any
Can
questions?
you-
Sorry,
Yeah,
go
on
ahead.
the balance sheet, then we don't usually see this level of detail, is that?
You
did I hear
can, you guys just have not provided it. So it's
Okay.
mixed bag with most of the audits we do. Some choose to present this level of detail on the balance sheet. Others choose to just present that net number. So it's a change that if you would like to make it, we can put this on the balance sheet. It's perfectly fine. If you prefer to keep it a net number, that's fine too. So either way is acceptable.
Just thinking about your comments, Chuck, would you be interested in seeing that on the balance sheet?
I think it's valuable to see the breakdown between property and equipment, because we kind of assume we won't be buying more property, but we may be buying more equipment, and that would detail it on the balance sheet.
Greg,
So,
if you could just make that edit.
yep. Would you like me to make that change before we issue final copies?
No,
No?
no,
Okay.
no.
No, we can add that to next year, and make that change, and that won't be a problem at all.
Okay.
Footnote 3, this footnote, when they overhauled the not-for-profit financial statements and how they lay out, this became a new footnote, and it's a required disclosure. This footnote is important for a couple of different reasons. They wanted people to be able to understand the financial health of a not-for-profit organization, because sometimes it's not quite clear. So they call this a liquidity footnote. And what we would do if you had investments or accounts receivable, other highly liquid assets, they would go into this top part of this footnote in addition to cash and cash equivalents. And what they're trying to do is they're trying to say, okay, basically what cash or highly liquid assets does the organization have to live off of for the next year? So we total those up. In your guys' case, only highly liquid asset, again, that you have the way you present your financials is cash and cash equivalents. So we put that 183,000 there. Then down below there, if you have earmarked that money, or if you have restrictions, so if you had a donor who gave you $50,000 and said you can only use this for shirts for your guests, then we would have what's called a temporary restriction. We would put that in there, it deducts it back out. Because that cash would have to be used on t-shirts for your guests, it is not available for the general expenditure of the organization for the next 12 months. And then you get a net number. In your guys' case, over the last several years, the way the information's been presented, we are not aware of any restrictions by any of your grants or donors for the organization and the cash that you have on hand. I would suggest keeping a close eye on that. In your case, you may just get general contributions, and that's perfectly fine. But if you get a grant and they have restrictions, then we need to be aware of that, and we need to account for it accordingly. And certainly, Karen, if you or Kindred or anybody has any questions, please feel free to reach out to me. I'm happy to walk through how we need to track that. But again, as we audited the organization, the information that's presented to us, we're not aware of any of those restrictions. But again, so as you're talking to your donors, you could compare this number to your overall operating budget for the year and make a case for needing additional cash to help support your organization. Hey, we spent $3 million a year. Right now, we've got $183,000 to live off of. We need your help. Help us support, or we're going to have to make some drastic cuts to services. So anyway, again, I want to point that footnote out. It can be useful when you're trying to reach out to donors or talk to people about needs for the organization. In addition to obviously the good work that you guys do for the community, sometimes donors need to understand where you're coming from and what you've got available and why you need that donation. So any questions on this footnote? Okay.
Nope.
We'll keep going down. The next footnote is notes payable. This footnote is just designed, it's a required disclosure. It's designed to explain to the reader of the financial statements what your future cash obligations are over the next 5+ years as it relates to your debt. If you were leasing a building, we would have a similar footnote related to that lease based on the new lease standard that finally went into effect last year. You guys don't have that, but you do have the note payable. So this schedule shows what your principal obligations are. This does not include interest, because if you were to pay that balance off in 1 year, it would alter the total amount that you have to pay. So these are just principal payments that'll be due for the next 5+ years. So right below that, the last footnote that I want to talk about is that net asset footnote. Again, they modified it several years ago when they overhauled the not-for-profit standards. It's required we lay it out this way. We don't have a choice. There's a net investment in property and equipment that matches the net fixed asset number off the balance sheet. I don't know why they wanted to show it that way, but they felt like it was important. I don't agree with it. I feel like it's odd, but it's required to be in there. So that's why we put it there. The undesignated is basically the total of your unrestricted net assets less that property and equipment investment. So your remaining equity is actually negative. Equity and net assets, or I guess a term I use, intermingled. They accomplish the same thing. Net assets are what you have for not-for-profit. If you had purpose or temporary restrictions, there would be further disclosure here of what those were. And they would also lay out and help break out your total net assets further. Again, you guys don't have those restrictions. So that in a nutshell, those are the big footnotes that I wanted to cover. Does anybody have any questions for me?
I think you've done a good job of presenting this and detailing it, so it appears well crafted.
I think we're good, Greg. We appreciate you taking the time tonight to present all this to us.
Okay, well, I will leave you guys to the rest of your meeting. Certainly, if anybody thinks of questions later or there's things you'd like to discuss, feel free to give me a call, shoot me an email. If you'd like an in-person meeting, I'm happy to come over. We can talk through it. We very much appreciate your business, and I look forward to working with Karen and the rest of the crew here on 2023 and moving forward. So,
Greg, I did have one question, just thinking about our conversation at the exec committee meeting. Normally the timing on audits is a little different than what occurred in this instance.
that's correct.
Can you maybe share that with the board so they understand like what we should be doing this year?
Yep. So the timing of your audit is obviously somewhat contingent on the organization. It is not common to be presenting a 22 audit, after the end of 23. Normally we would be starting the 23 audit at this time. And we certainly can if Karen has the books closed and Kindred's done and we can get into it. And that's what we prefer. But it's been late. Obviously, you guys are more familiar with your organization than anybody, and I don't need to repeat anything, but you've had significant turnover in personnel. There's been some trouble getting the books closed and the accounting done, timely to get us the information we need to get started. So when we were first engaged, the goal was to start the audit in August, have it completed by mid-September. So that way you could get it to the city and county there in Douglas and Lawrence. Since then, it's dragged out. We would just assume get it done sooner. I think you guys would benefit from having it done sooner, so you have that information in front of you. It sounds like going forward, you're going to be looking at monthly financials. I feel like that obviously is just about as important as looking at an audit report. Because you got to be able to make changes in real time, especially if you need to, depending on revenue and expenses that are incurred. But if we can do it, we would like to do that audit sooner, so we can get it to you sooner. Getting it done this late after the fact, still helpful, but it doesn't allow you to really make any decisions based on things we find or present if another 12 months has already passed.
Okay, thanks, Greg.
Did we have provisions within the city financing for date of audit to them? Trying to remember.
I'm not sure.
I don't remember seeing anything like that.
But it certainly, having joined the board, in the summer last year, looking at this now, I realize why 2023 was so challenging. Start the year with only $183,000 and you know, it costs a lot more than that to operate, so. It was a tough year. Not sure how that would have changed if we knew this earlier, but this really paints the picture of the situation. Well, Greg, again, just thank you for all your time tonight and the work you
Yeah.
put into this.
Yeah, so I'll leave you to the rest of your meeting. And again, if anybody has any questions or would like to talk, please feel free to get in touch with me.
Okay.
Thank you, Greg.
Have a good night.
All right. I'm gonna share, well, no, give me a moment here. Sorry, trying to figure out how to get into the other tab. Okay. Well, next on our agenda is just if you're ready for approval of the audit. Essentially, there's a letter that they've drafted that is expected that we would sign it, both James and me. So I just put together a draft motion that entertain that if someone would like to make the motion.
I'll do that, so long as everybody feels like we're ready to do that. Yeah, I know I do.
Can I just check one thing really quickly? I just. I know we already submitted our 2022-990 and just making sure that the assets, you know, align with our filings, but
Yeah, the 990 was done, that was part of their service. So I'm assuming that the
just
numbers,
a lot of work. We normally do the
yeah,
audit first and then you file your 990, so
Yeah.
I just, so they did that compared to the 990.
yeah. So they did both the audit and they did the tax preparation.
You ready?
I think so.
All right. I move that we authorize the executive director, James Chisholm, and the board president, Charlie Bryant, to sign the representation letter prepared by Cummins, Kaufman, and Schmidlin CPAs, PA, for the 2022 annual audit of Lawrence Community Shelter.
Right. All right, the motion's been made and seconded to authorize James and me to sign the letter. Any discussion about the motion? Right, all in favor, please say aye.
Aye.
Bye.
Any opposed, say nay. All right, motion passes. Thank you. Next up, Executive Director report.
Good evening, everyone. One of the things I sent Charlie, provided everybody with some demographics for January, and I know I talked to, and I said I would provide demographics going forward, so we can review actually not who, but how the guests were made up by their demographics. So if you look at the report, there's two reports that are kind of identical. One has more information than the other, and I'll explain why. Let's start with the one that has a total of 221. If you see that one, Charlie.
Let me
The,
pick it first here. Oops, I'm not sure it's the right thing to do.
That's the other ones. Well, we can start with that.
No, I can pick the other one.
Okay.
All right.
So this one is our night by night, and what this report is saying that in the month of January, we had 221 unique individuals come through the doors from January 1 to January 31st. And this kind of gives a makeup of who they were. As you can see, the category and under age, we had 69 individuals between the ages of 35 and 44. And it kind of gives a breakdown of how those 221 individuals break down by age. 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 221 individuals break down by age.
And these are only the night by night.
Right,
Okay,
only 9 minutes.
only night by
Right.
night.
So. And if you have any questions, just tell me, I'll just go over what each category talks about, but if yours, the numbers speak for themselves.
Are these aren't duplicated, so these are
No,
all
they're
unique.
unduplicated, unique individuals.
So a total of 221 unique clients
Right.
during January.
And how many, what are we gonna refer to the not night by?
90 days, that's in the next report.
Okay, but okay,
We can talk about both of them simultaneously if you want to.
no, okay, I just wanted to get the whole.
Okay. Well, I'm gonna
I
talk,
appreciate that going through each.
yeah, I'm gonna talk about the other one after you talk about the 221. The
I could,
difference is, every night, these 221 exit from the shelter. And so the other report is more exhaustive because they stay and we have more information. They do a different type of intake. And we ask for income information and different things, so that gives a breakdown. One of the things I plan to do is initiate a 30-day program. And so we'll have more information on most of the guests at our shelter instead of just the night by night. So the ideal around lengthening the time that people should stay in the shelter gives them some sense of ownership. It gives us more time to develop relationships with people and to get to understand what some of their barriers are. And it's hard to do that if somebody's coming today and they're leaving in the morning. We don't really, we have case managers in the evening, but it's in the evening and all they're working with is trying to address some of those immediate concerns. And then they refer, and it's overwhelming our in-reach case managers. Because during the day, when they first come into work, some of the guests are still there and they're wanting to address their issues with case managers. And they are the case managers for the 9-day program. So we're gonna do some work in adjusting that. So.
And this is just for the month of January.
Yeah, this is just January. I thought then every month I'll talk about the previous month, or the numbers for those months, and that'll give a good way, because the first report in January, I didn't have these numbers, I didn't even have access to HMIS, so I said, okay, this is a better way to do that, is give the previous month, because it's already closed out, so.
Yeah.
Then it gives the gender breakdown of what the gender makeup of was those 21 individuals. The next page talks about race and ethnicity.
so can you slow down just a second? So in the gender, I know we've heard in the past about the high number of women that are needing services. And it looks like 2/3 of the clients that you've had are men. And then 28% are women. Is there are women not coming to the shelter, or is the need for that service less than it was indicated a few minutes ago? Like Missy had talked about it to us a month or so ago, and I remember talking about the need for it being pretty high.
Yeah, night by night.
So this still represents like just 24 hours of each, and males predominantly coming in, or people identifying as males being the more clients that you serve in a night by night basis.
Right.
Okay.
So one of the things that we looked at, or I believe I wasn't there for the conversation, but I know some of the conversation about the makeup of the unsheltered population that are still unhoused and on the streets. Yeah, it was a high proportion of women that were still on the street. And if I can think about what the conversation might have been about, is what are some of the barriers of why there are not more women in the shelter? And some of those reasons were maybe the makeup of the congregate shelter, maybe some of the non-private spaces for people. And there was a lot of speculation on why. I don't know the actual reason, and we're just looking at numbers, so that might be the case. I think, I don't think this is out of line with most shelters, but I think the reason why that might be a concern is because proportionate of women that are still unsheltered and not accessing shelter. So there might be a reason for that correlation. I haven't had enough time to study that, but we can definitely look into that. One of the things I know Misty and I are talking about are doing another survey, doing a survey to kind of ask some of these specific questions to.
Misty put in a chat, 51%
Yeah.
women surveyed, they cited safety and no women only emergency beds.
Right.
Thanks, Misty.
And so one of the reasons that might be the case is that when people identify how they identify, that's the door they go into. And that's been accepted, and that might be some of the reasons. And so we're looking at how do we offer private spaces to maximize the privacy for everybody? And maybe that will alleviate some of that. But in the space that we have and the amount of beds, it's gonna be difficult. And so some of the things that we're looking at are using some different funding to create some spaces where people can have more privacy. So that's in the works, we're looking at that. And like I said, we're gonna try to do a survey to ask these questions, and Misty has some good data, and we can break down the survey by asking different questions and things like that. So that will lead to some of that.
Thank you.
Then it talks about race and ethnicity. Then we have veteran status. See, out of the 221, we had 10 veterans that identified as veterans.
Hey, James,
Yeah.
So the housing authority has 45. What we call VASH vouchers, which are exclusively for veterans, and right now we have 5 available vouchers. So if there is anybody there who is ready to make the transition to housing, just shoot me an email and I'll get staff out there. We'll start working with them in the VA to.
Now, these are night by night.
I don't care.
I know, but,
Yeah.
and one of the things that's difficult by night is that, and I'll talk some more in my report about some of the aspects we're seeing with night by night and why I think it's a horrible idea to do night by night. We don't have a lot of connection sometimes, and overnight, a lot of people or just say some of the things they want, but they don't stick around to do some of the things. And I have an idea why that happens, because they're thinking about what's gonna happen that day, how are they gonna meet their needs during the day, whatever those are, money, food, whatever the things they got. A lot of our guests still have different lives, productive lives outside of the shelter. They still have housing. But I will definitely pass that on to our case managers. We are in the process of reinvigorizing our rapid rehousing program. I met with our case managers. Today is Thursday, right? I met with them on Tuesday, and we talked about rapid rehousing. I kind of gave them a brief introduction of what the ideal is, what our policies say we're gonna do, and then we're gonna start meeting bi-weekly to actually start doing rapid rehousing. So we're gonna, I'm gonna help them with case management and train them along the way, and we're gonna actually do cases together. I think we have about $30,000. That's what we started with, and I don't think we spent a lot of it. And we're gonna try to spend that 30,000 by the time the program is over in July. So that's what we're gonna start doing that. So 5 VASH vouchers, I'll keep that in mind.
I just wanted to point out, Misty's also made a comment about that. She said that'll be vital for the veterans that are staying at the village.
Can we just go back for just for the moment, the race and ethnicity, sure, I know that you.
Yes.
Shared a plethora of information, I'm so appreciative of this, and as I'm reflecting on some of the data we know from the community health plan, some of the data that we understand is our community makeup as far as demographics. Overall for Lawrence, and this is Lawrence specific, these are the highest numbers. I mean, I don't know, I'm not in the health department anymore, it's Charlie, but maybe you can help me understand. American Indian, Alaska Native, or Indigenous, 13. When you see numbers like 13, then we know what our indigenous population is as a whole. That's significant. As a 100% even for overnight guests, for 24-hour guests. So we're seeing an increase or no, a big number in that small population that we know that represents Lawrence, and another big number for Black African Americans, so 35. When we look at how, and I know this is census data, and I know that we're talking about, even the barriers for people to attach their name to a census, because you have to have all those things, right? You have to have a residence, you have all those things. But when you see that there's 39 out of 220 who identify as Black, and then you also look at the most recent data that comes out from those who are incarcerated right across the street, the facility is also a high number for Black and Indigenous people as well. So I'm just thinking, what my mind goes to is like, where are our Black and Indigenous people who are unhoused there? I mean, like, it's just an abundance of people who identify with identities that we know are in need of housing and it's there. And it just kind of complements that information. And sometimes we don't have that information to show when we're talking about what disparities look like. And here it is right here. So I really appreciate that.
I don't know how this aligns with the population. It's
less for, like I said, it's also barriers to
Yeah.
connecting to the census for individuals. So it's 2%
In
of
Lawrence.
Indigenous of Lawrence, and less than 5%, it's 4.8% who identify as Black in 2022 or 2020 census, but I think it's 2022 specifically. It's so that's significant to me. And I'm sure, maybe to others.
And that's why I think it's important to have these numbers so we can start these conversations and we can use actual numbers to start addressing. And that's just a start, because everybody knows once you start looking at numbers, there's a lot of reasons why these numbers are, but it gives us a place to start looking. And so that's what I wanted to do. So I can, I keep forgetting that I've only been doing this at the shelter for over 30 days. And I do, because it's exciting work, it really is. But to start to see some of these processes in place, there are good processes in place at the shelter. We just have to fine tune it to have these outputs like this.
Can you just give us a little insight into the data that we're looking at? Is it collected every day? Is it collected?
Yeah.
Okay, so as someone
Mhm.
is processed in for the overnight,
Mhm.
they answer these questions to help
No,
track it? or-
since it's night by night, if somebody comes in and they answer these questions, if you notice, these questions are something that's probably not going to change. So somebody's ethnicity is not going to change, their gender is not going to change, their age. And so we check them in and log them in as when they're coming in.
Okay.
So we know who they are. When somebody new comes, they're a new record. We collect that information
Sure.
and then we add it.
Got
So
it.
that's why the 90 days are a little different, because the way we gauge a lot of that information is that we do assessments, and there's an entry assessment, there's interval assessments where you can monitor what's changed between a time period, and then there's an exit assessment to see if the overall health and wellness or position of income or housability has changed from when somebody entered to when they exit, and that's how you kind of monitor some effectiveness of the program, is to see if coming to this program has increased a percentage of the guests that they serve. That means that this program must be doing something to do that, and then you can say, we can look at what that might be, and when you look at differences in programs and those numbers, that's a place to start. It's just numbers. That makes a lot of sense.
And the data has been routinely collected
Yes.
for quite a while. I mean, this isn't new.
No.
Just hasn't been presented to us yet.
No, I think Melanie says she puts these reports in something on the board share.
Okay,
I don't know if they look like this.
I don't think we've seen it before, so I appreciate you bringing it to us.
Really.
All right,
But those are good questions, because it kind of outlines the difference in the next report that I want to talk about. We have veteran status, 10 vets were served. Then the social security validity chart. The best way to uniquely identify someone is a social security. And the reason that is because supposedly everybody has a different. And so if you say this person is associated with this social security number, they're the same person. That's how you duplicate the data that's used in HMIS. So nobody ever has to give their social security number in any program. It's against the law to require somebody, even though a lot of programs do that, it is against the law. And so that's why this is one of those validity checks that says if we have 197 individuals reporting their full social security number, it's reasonable to say that there's 197 unique individuals. So that's how that validates that.
Okay.
And then you have some people that only want to give partial numbers, which is fine. But the system makes sure that those partial numbers, it's usually maybe the last four, are not the same as anybody else. So, and then they don't have to give it. We have 9 that prefer not to answer. And then we have 9 that say they don't know. That's different than no answer or missing information. So when you see that, that's not a good record. It's just no answer. That's it on that report.
All right.
So the next one is our 90-day guess. And we had 45 unique 90-day guests in the month of January. And some of these are identical. Well, the reports are identical as what I just talked about. There will be some different ones in here, and I'll highlight those, but we can look at the numbers together, and if something stands out, you can ask questions about that. We have age, gender.
So here the gender looks a little bit
Yeah.
higher for the
Yeah.
women. The race is even higher yet for Black and American Indian. Those are higher than the night by night.
And I think we have, at any one time, I think we have like 28 to 30 guests at any one time in 90-day program.
But it was 45
Oh,
in any moment
no,
during-
altogether, or 45 different people during the month. of
during,
January.
yeah.
And I'm talking about exits on here too, so that'll give you.
What did you say, the average per night was 28 to 30? Is that what?
The amount of individuals in that program at
Right.
one time, yeah,
Yeah.
28 to 30.
Point.
Fluctuates sometimes. We have on this one, the difference is now we have people identify if they have a chronic illness, if they have income. And some of the first thing we talked about, are they disabled? We capture disabilities.
So 73% of people in the 90-day program have a disability.
Surprising.
Mhm.
This year.
And these disabilities could be physical or mental. When we talk about physical disability, I guess it's gonna break it down.
Okay.
Developmental, yeah, it breaks it down. Each different-
44% have a physical disability. 71% a developmental disability. No, I'm sorry, 20%. And then a chronic health condition. 53%. This is really detailed.
It's gonna be so significant when we have that Wednesday. Is it Wellness Wednesday, yeah, this will help design some of the things that we're bringing to the family to
I'm
outside.
excited about that.
Yeah, me too.
49% have a mental health disorder.
Then the one that's significant. It says on the substance use disorder. I believe it, and one of the things that stands out, these are self-reported.
Yeah.
So, I really believe that the substance use disorder is a lot higher.
Yeah.
And, I'll talk about some of those things when we talk about exits from our program. Chronic homelessness, that's 3 episodes of, being homeless within a 3-year period, I believe.
So 29% have had 3 episodes of homelessness in the previous 3 years. Okay.
And it says clients entering from homeless, that means they came to us and they were homeless. So gives breakout. Well, this is all useful information when you start to look at the makeup of what our homeless population that we're serving inside the shelter.
I know this is the first, and I don't know how often this is done. I know, I mean, this is a collection of data that I can absolutely respect, that it could take some time.
The run report every day.
That's good. And so I would like for us to consider having this included in each in our packets or agendas for our monthly or quarterly records.
I'm gonna make it part of my report.
Okay. So thank you.
And one.
I get excited about this. Yeah. I mean, it's-
One of the things that once we institute the 30-day program, we'll have this level of information for the majority of the people we serve. So those 221 that we don't have, just imagine if we had that data for those 221.
Yeah, that's fine. That-
We talked about veteran status again. We only had one in the 90-day program.
And this page looks like a lot of information.
Prior to the situations where people came from, where they lived before they got to the shelter. And I don't have the synonymous information about exits. One of the things that can be collected in HMIS is what the destination for people, where they exit, where do they go? I have that information, but I don't have it broken down here. I had to run a different report, and I'll talk about how many people exited from that 90-day program in the month of January.
What's the prior living duration? What's that mean?
How long they were, where they were before.
Oh, okay.
How long they lived with.
This is the January, correct?
Yes.
Do you see, we'll see it, I guess, next month, but, would you say looking, because you have the access, looking at February's, has there been significant change to this data, or you haven't?
I didn't look. I mean, I might
Yeah,
have
that's
looked.
fair. It's like
I can, one of the things I could do is run it for all of last year.
That's exactly what I was thinking.
Okay.
Just as a way to have a basis.
Because we also recognize if it's 90-day or the overnight, there was increase because of the inclement weather.
Right.
So I just kind of want to get a
So February will be different,
yeah.
of course.
But you can run the smaller population, the 90-day, but really you wouldn't be able to do apples to apples on the 99.
Not compared to the
Because it-
level of data here.
Yeah, I mean, the sheer number of differences,
Mhm.
staggering.
But once,
Yeah, I mean, a year ago, we weren't offering that level of service.
Right.
So I'm not sure.
But this group, might-
I think this group would be,
yeah,
yeah, this
Yeah.
group's still there, 9-day program,
Yep.
right?
just scrolling through the income stuff here.
It talks about the income, which I think is, and one of the seeds I'm planting with all of our case managers is that even if someone doesn't have any income, it's important that we know what their income is. Because income is synonymous with being housed. and what they make, because it shows you what's missing. So it's important to start that, even though with the rapid rehousing program, income is not a requirement to be in the rapid rehousing program. But if you look at that, that means that the only living or residential things you can find would be subsidized 100%. And so that's fine. But we have to start looking at how we supplement that subsidy with something else, because we can't provide that. It's not a long-term subsidy. It's a temporary subsidy for housing.
Is there a way to capture the under income that those that are on like SSI?
Yeah.
uh, Specifically says.
Mhm.
This is
Yeah.
my
I don't know, yeah, we can talk about, I mean, there's a report running about who has this, how that.
I think that would be.
Especially with the disability percentages being so high. Be interesting. I know Misty had talked to us about the importance of, I think it's called a SOAR case manager,
Case manager.
that they really connect you to disability
And
income.
so if someone has a disability and they're not receiving benefits, a SOAR case manager's effectiveness in helping someone obtain benefits is at an increased rate because of the amount of documentation they provide to the disability determination board to substantiate that that disability is valid and should be paid disability. Because back in the days, they used to say, you already gotta get denied at least 2 or 3 times before it's approved. And that was, it seemed like that was true, but the reason for that was because to gather a lot of the documentation takes time. So when you first apply, there's not a lot of history maybe, or a lot of documentation that supports being a long-term chronic disability. But now with the gathering of evidence, to go back to find out when some of these things started in adolescence or something like that, developmental changes or physical changes, that increases the ability for someone to receive disability on their first time. Misty knows what the percentages now are for first time applicants. I think when I first got SOAR trained, I was SOAR trained back in 2009, maybe 10. And I think it was up around 90% of approval rates. SOAR trained. So out of the 45 guests in January of the 90-day program, 9 of those were exited. Out of those 9 that exited, 2 went to, it's not on the report.
Okay,
It's a different report. It has names on it, so I didn't send it to you.
okay.
2 of those individuals went into permanent housing. I think one was maybe a nursing facility, and I think the other was rental without a session. The other 9, unfortunately, were exits because of behavior of some kind. And so they probably went back to night by night. Any questions about the demographic report?
No, it's
No.
great.
Appreciate it.
I know I was asked to talk about calls for service by one of our board members. Chuck sent me an email to talk about what seemingly appeared to be an increase for calls for service. And I don't know if it's an increase, you would know better than I, but I can tell you a lot of the reasons why. I had my shelter manager put together what he could find out from our documentation about how that happened. And I'll share some of that and then talk a little bit about it. Okay. So he says for the number exit, it seems like we had 87 since January 1. These are exits that we asked people to leave the shelter. This is for whatever reason. And then from critical incident reports, the times that are documented that we had non-emergency call is 26, but he feels like that number is inaccurate. And that he think it would be more around 45 times mark. And that is, since I've started, I am instituting zero tolerance for threats, physical threats or violence, and we've had significant violence at the shelter. It was alarming to me, but I guess it occurs a lot. We've had damage to property. We've had individuals using that first two weeks at the shelter during the winter emergency. There were individuals smoking cigarettes constantly in the shelter. They were smoking marijuana in the shelter. Whenever we could attribute that to a person, we asked them to leave. Or we didn't ask them to leave in the beginning because we didn't have alternatives. Then when we had alternatives, we said, you can't do that here. We're gonna ask you, we're gonna transport you somewhere else. And then that's what happened. But when winter emergency went away, that kind of decreased a little bit, but it still happened for that first couple of weeks. And then we started doing zero tolerance. I mean, if you do that, you have to leave. Depending on the occurrence, we will let people come back the next night. And if it continued to occur, we would stretch that out for longer term. What I've instituted since I've been there is that anybody exited for drinking or drugs from our property, we're requiring them to receive a radar assessment, which means they have to go to a professional and be assessed for their level of substance use and comply with the recommendations. That serves dual purpose. It shows people that we're not exiting you because we don't care about you. We're exiting you because your behavior needs some attention, and we're going to send you, ask you that you go to professionals to have an evaluation done. It didn't sit well with a lot of people in the beginning, but I think people are doing these assessments and they're coming back to the shelters. I've had a lot of contact with TRC and RADAC wanting to know, hey, what are you guys doing? What are you doing? I'm saying, well, we're trying to help people, and we're not just throwing them away by saying, oh, you did that, you can't come back. We're saying you can come back, but you need to address that situation. Some of my background was always easy to let somebody know you're in a situation where that's against the rules to do. You don't have a lot of options for living, and you would jeopardize your living to use or drink, then that means that there might be a problem. That's the best way to illustrate it. So people start to listen to that, and then I've seen people go to church. Well, say I'm not going, then they want to come back, and they say, well, I'm gonna go. They go, and then they start to go to detox and start to do some of those things. But hopefully it'll be better. But we have to adopt a zero tolerance because night by night is that anybody can come under the influence. When I was leaving today, we had a guest that was in 90 days. Now he's no longer in 90 days. He had to be helped into the shelter because he was inebriated. We couldn't stand, and it's a risk for him to be at the shelter. We can't care for somebody. But we let him stay. He's not a behavior problem. But we said he cannot, well, I think he was on day status. I don't even know if he was in the program, but he was one that was vulnerable enough to where a case manager decided he could stay in the shelter on a day basis. But now he can't because he can't take care of somebody who's drinking like that. So those are some of the reasons for some of these exits. I don't know if it's increased, but I know that since I've been there, we have to establish that there are rules, and some of those rules we have to have zero tolerances. You can come under the influence, but you can't have drugs or alcohol on the property. This week, we've had 3 people sitting in the car, just having a party, drinking, and then they want to check in. No, you can't. You have to leave. And it's been really difficult. So, but I know that there's an incongruence to saying you can be under the influence, but you can't use here. That's not the nature of addiction. Addiction doesn't say you have the ability to stop when you want to. You stop when you can't. You use it.
So has the zero tolerance policy been implemented into the framework of operations so far, or is this something that you are building?
We're building, but I think one of the things I'm identifying is that there might have been some conflation of what low barrier meant, conflation with no barrier, and that's not the case. Low barrier is, imagine the door, the entry. How do you get into a shelter? There are barriers to get into a shelter, such as being UA or breathalyzed or patted down for weapons and things like that. Or saying you have to have so many different things before you're allowed into the shelter. Low barrier means some of those things are not in place. You can be under the influence. We're not gonna pat you down. We're gonna ask that you don't bring weapons. We are gonna institute random pat downs and searches for someone that brings in a thermos full of alcohol. We're gonna have to start checking thermoses from now on. Just normal things that we're gonna start instituting. And we're doing that with some caring by letting people know you're welcome here, you're welcome to be under influence, but we cannot have you use it while you're here. And that transition is difficult. So that's what we're going to check. I think that might account for some of those things.
Now, do you see a likelihood that as staffing is increased, and speaking of the security, for instance, will that minimize the need to call in?
I don't know. So when we encounter someone who's violating the rules, our first incident is not to say you have to go, it's to arrest that behavior immediately by confronting that behavior. And once we start to have a dialogue, it escalates to non-compliance. I don't want to stop, I don't want to do anything, and then a lot of that behavior escalates to my staff are being treated disrespectfully. We even had staff that reciprocated in a manner that we're working on how to develop de-escalation techniques and things like that. When it escalates to a point where now you're no longer welcome here today, we're gonna ask you to leave. And when somebody says, I'm not leaving, we have to enforce that. And so we call non-emergency. Usually just the call itself, we call for service, and usually the 9 times out of 10, the individual leaves. Before. But we have to follow through, because when I first started, people just wouldn't leave. They would just walk away and say, I'm not going anywhere. And it was almost accepted, which can be accepted.
Just wanted to point out on the previous discussion about the SOAR case managers, Misty had pulled up some statistics for us. 65% of applications using SOAR get it on their first application, and 15 is the approval rate for people that don't have a SOAR case manager.
So that's why SOAR is not. But if you know anything about SOAR, you do an exhaustive search of records. A case manager will spend a lot of time trying to acquire records and dates and interviews with doctors and things like that to get the information to present the case, the disability. So when they get the case, a lot of times when they see someone SOAR trained, they know the level of documentation of what it should be. And so that's why that SOAR accreditation, as it were, is so important.
Mhm.
So.
Just want to point out, we're about at 7:30. Are people good for another, like, if we go to 7:45?
I've got
Important stuff, yes.
Yeah.
I have one more thing on my report. Something I just wanted to add something while we were talking. I don't remember what that was. I want to talk about building a relationship or continuing to enhance the relationship that the Lawrence Community Shelter has with Douglas County. I met with the county administrator, the assistant county administrator, the undersheriff on February 20th, and there was another deputy there, deputy sheriff. His name is Greg, I don't remember his last name. And one of the things we wanted to talk about is that The shelter does receive funding from the county, and there are some specific outcomes that we're supposed to adhere to, which is, in just a nutshell, we're supposed to provide emergency shelter service and partner with local, state, and federal government, local law enforcement, and emergency medical personnel, and all regional continuum of care agencies. And so one of the things I wanted to do, me being new in town, was to start to meet with Douglas County sheriffs, which are our neighbors, and become good neighbors and find out, just introduce myself and kind of get a background of some of the things that I could do a better job at relating to them. And so I do have a meeting with the sheriff scheduled in March, and I'm gonna meet with the reentry coordinator. Part of our grant from the county is that we provide reentry beds whenever they need them, up to 2, but if we have vacancies, we can do more than that. I think that's a valuable tool to assist someone that is trying to or orient back into society from incarceration. So while we were there, we talked about our plan to develop a pallet shelter behind the shelter. I know everybody here is probably familiar with that. I'm probably the one that's not as familiar. But I talked to them about, they were concerned about, would that spill out to the property to the south of the shelter onto county land? And I assured them that no, we were staying on the concrete area behind the shelter, and kind of gave them an idea of some of the programming that we're working to institute. And this goes into night by night. I would like the pallet shelter to be our night by night. It would be so much easier to manage behaviors if everybody had their own pallet. It's gonna be the low barrier shelter. They have their own pallet. It's gonna be just like the village where it's self-contained. We're looking at getting a special use permit to do that. We've engaged with design professionals, which are architects, to look at what it would take to build a structure for the showers, the restrooms, and all of those things like at Pallet, but behind the shelter. It would be difficult to have 32 individuals coming in the shelter to do basic needs. That would not be good. So we're looking at some of the options to do that.
32 is the new number that's more firm. It was 45 when we talked about it a few months ago. So there's space for 32 of those pallet shelters
Yeah,
behind the
And
building.
that never changed because of the available property space.
Yeah, the space. There's space to do 45, but not to be contained in that area. So it has to be contained. So we broke it down and still have room to have another office space back there,
Restrooms as well.
restrooms as well. Yep. So we have to break that down.
Question about that, though, if we use the pallet for that purpose, then does it still remain a night by night situation, or does it end up extending during the day?
And that's a great question. I don't know, but I think
I
that
would think it would be more difficult to.
I think because if you have 32 people and all you have is little pallets, night by night is probably one of the options that we need to provide, because we're gonna have options for guests that want to become involved in programming. That's what the main shelter is gonna be about. We're gonna have a 30-day program, which will have roughly 50 to 60 beds for that. We're gonna have the rest of the beds would be about 65 beds maybe for a 90-day program. And then that way we'll have options for every situation that somebody might present themselves. So something contrary to belief, the shelter's gonna be nice, but there'll be some people that don't want to be there, I'm sure, all the time. So I think when we have different options for people, then we could make better connections.
Do you not think that the pallets would be more desirable for guests who are longer term, because there is some less communal storage that can happen in the pallets. For those who are concerned about maybe, some of the reasons why some women are not seeking shelter, the pallets do a much better job at addressing in the communal setting. So I'm a little concerned about using the pallets only for night by night, when I think it might be a good solution for some people who are experiencing barriers to care because of the private sleeping situation.
If we, I see what you're saying, but logistically, we would still need to access the main shelter. If you're in Paladin Island shelter, and we don't have the room to have that many people accessing the shelter at one time. And so as far as programming, we have more, if the guests that are receiving longer term stay are in the main building, they will have access to the dining room, they will have access to group rooms, they would have access to a lot of different things that can happen in the shelter versus out of the shelter. I think we would still be able to have a dorm that's just for women. We will be able to have a dorm that's just for men. We'll have an area for everybody, and we'll have a bigger dorm a larger dorm for men for 30 days. So,
And what about Monarch?
Monarch's being used by our 90-day guests. So when someone's getting closer to becoming housed, they get to model independent living in Monarch to prepare for moving into housing. It's also for individuals that do need, would do better in a smaller setting. And so we have people that want to be roommates in there that get along together, that are more vulnerable. So we're using Monarch for that. But then, if you realize, we're gonna have pallet open up. The village is gonna open up for people that need a different space, that are not, have not presented behaviors that are not conducive to congregate living. I have to be careful how I say things sometimes. But then we'll have all options for everybody.
Attention library patrons, the time is 7:30 and the library is closing at 8 p.m. We ask any patron needing a library card to come to the accounts desk immediately, since we will stop issuing new cards in 15 minutes. Any children or teens needing help calling for a ride home should go to the children's desk now. Thank you.
But logistically, it would, one of the things that I see as detrimental is mixing night by night with any other population.
You said it earlier, James, when we were going through your numbers. You made this statement about night by night, that just kind of an off the cuff statement, that you don't feel like night by night's a good idea. What do you think would be a better alternative?
For the night by night,
Yeah,
is to offer a longer stay for individuals that want it. Some individuals will self-exit because they don't want to be there, and that's fine. But right now, they don't have that option to stay. One of the things that being able to stay in longer term, it gives the sense of ownership. It gives a sense of, now I have time to prepare some things or take care of some things in order, and I don't have to worry about what I'm gonna do during the day. I don't have to worry about taking all my stuff with me or having my stuff stay somewhere and be safe. I mean, it just alleviates some of those issues that happen when you're transit.
And so do you mean a longer stay for people who don't want to engage in programming, but they need a little bit more time?
So that's why I think the program should have different lengths though. So in the 30-day program, what I hope to happen is during that 30 days, we can impact on someone that we're here to help, and this is a good place to get that help. It gives them time to relax and kind of arrest some of the trauma, to be settled, to have a place to settle. They don't want to leave today, they can sleep today. But, and I'm thinking that during this first 30 days, our goal is to help them do what they want. Tell us what you need, tell us what you want, give us some ideas of how we can be of help, and we'll come up with options that might help do that. Within that 30 days, it gives somebody experiencing some trauma time to kind of make some decisions and start to feel kind of safe. And what I hope to happen is that with that sense of safety, that nobody wants to go back. I think they want to say, well, I want to be in the 90-day program. And during that time, that's when we start to look at, here's some of the things that we think we can help you with. What are your goals towards becoming housed? What are some of those barriers? And we start working on some of those.
And what will then happen with winter shelter?
We will still be able to increase our capacities to the 140. We're still gonna do that. So the numbers won't change about how many we serve. We'll still be able to do all that and then winter emergency is just as an emergency. So we're gonna have to allow, even with pallet, each one of those pallets has gonna be one person, but there's a availability to put 2 people in there. So there's a way we can still do something.
Well, I would almost, to that end, if in fact the pallets, the 32 that go in there are designated only as day by day, then two people could, yeah, 2 people.
The problem with that is when you have 2 people that,
Yeah.
we saw that in winter emergency and it was like 40 people in that warehouse. So well, more than that necessarily avoided each other on the street. They couldn't avoid each other and it was pretty hard to deal with some of that. So, but hopefully some of the things that we're gonna do also is provide some of the training for the staff to kind of address some of these behaviors and the escalation techniques and really knowing that you only get into a power struggle if you have the power and you try to use that power. You maintain power if you don't have to use it. And it's hard because even the staff are traumatized by just the sheer numbers, the uncertainty of what their future held at the Lawrence Community Shelter. And I don't know if you haven't been there a while, it's just in the 30 or 40 days I've been there, it's starting to relax a little bit. Start to relax.
So what sort of ratio do we idealize as far as number of clients per case manager? Is there a, 1 to 20, 1 to 30? Is there any sense of that?
Not yet. With night by night, we have 2 case managers and they help people with whatever they identify as what they need. They're available just to
Okay.
and then I think we're running basically maybe about 70 each night for night by night. So it depends on what time of the month. During the first of the month, a lot of our guests have money, and so they choose other options, which is wonderful. But then when they don't, they come when the weather's nice like it was today. They have other options.
Well, I guess before we get kicked out of here, do we have an update on?
Did you have anything?
Pallet?
Yeah, I do have an update on, last month we approved, there was a motion made for me to work with Melody to do a retention. It was signed and Melody, what do we call it, a retention bonus or?
Yeah, retention offer, yeah, incentive.
Retention incentive.
Mhm.
It was signed. I really appreciate Melanie. I realize that I'm underutilizing her skills. She is a data person, by schooling. And she loves crunching numbers, but right now the need is personnel. And that leads me to the update check. We started to all day today and yesterday I've been doing interviews. We're interviewing for a village manager. We're gonna put out the application again or for DSAs to staff the village. And once we start to get people identified, the closer we get to getting our first guests. Next week, we're doing interviews with potential guests. I forgot how many we had lined up, maybe 35 that are coming over to to Pallet and what's a village. And we're gonna interview them, they're gonna tour the facility, and we're going to, talk about what some of the requirements and go over that with them. And then we'll sit down with case managers from Bird Nash, from Radac, maybe, just different individuals that have been working with them. And we'll identify who we're gonna start. One of the things I did identify is that even if we have 35 guests identified, we're gonna have to stagger the entry to the village. And I don't know what ratio I'm gonna use, but we don't want 35 people all in one day. I know that there will be things that we can identify right now that come up and will impede how we do that. And so it's gonna be better if we figure out how many we want to do a day or how many we want to do a week until we get to the maximum number we can have. So remember, staff will be new, it'll be the first time it's ran, so there'll be some things that'll happen that we'll have to earn out while we do it. So we're looking to hire the best qualified people we can to do that.
You feel good about the applicant pool? that
Yeah,
you're-
of course. Another thing is that a lot of the applicants apply for multiple positions. So once we review someone that might want to be in another position, we'll circle back and do some offers or something like that way. So, yeah.
Misty had raised her hand earlier. I'm not sure, Misty, if you're still trying to get in here.
If we have time, I just wanted to just briefly remind folks that when we were envisioning the pallets behind LCS, the reason for that was to have a place for individuals that were resistant to the shelter inside. So that was the main reason that to have a place, I mean, whether it's night by night or not, just to have that extra place for those who are chronically homeless and very resistant to services, and also to catch those populations that couldn't be served because of pets or because of sexual offense or violent offense as well. So just making sure that's still a priority.
Thanks, Misty. Maybe just briefly update on the union negotiations for those of you that aren't part of that process.
We met not this last Monday, we met the Monday prior, and where we are now, we will receive the articles that some of the bargaining, what would you call it, Charlie?
Bargaining unit.
The bargaining unit articles, and so we went through the prior Monday and we talked about some of the things that they call TNA, which means they're not, we don't agree to them, they don't agree to them, and we can strike them out. I don't know if they agree to them, but we did something like that. Where we're stuck now is trying to identify how to look at wage increases and benefit increases and identifying what kind of budget we have to do that. And so what the holdup is now is we're meeting with the city. We're gonna meet with the city to see what other funding we can acquire, because right now we don't have a fluid budget. We have a budget for all the positions as they were for 2024. And so before we can do that, I need to know how much room we have to do that. And one of the things we're thinking about, the assistant city manager suggests that they might start looking into a wage study to see what's a comparable pay for positions that we have, so that we're in line with what we should be paying. I don't like to negotiate with what I have to pay. I would like to do it, what should be paid, what's a viable wage that we should offer, that's comparable. That's what we should be able to know where we're at least, and then work from there. So that's where we're at now. We're waiting to hear what room we have. I think some of the things we talked about were, if there were changes, they could be consistent to, because we're budget or grant funded, we could start that at the beginning of another grant cycle. Is that when we talk about.
Perhaps, yeah.
Perhaps that could be something that we do, because if nothing, if we didn't have the ability to change anything, we really don't have a lot to offer. And so, but I know we always renegotiate grants or get refunded by the first year. I think that's where our grant cycle goes, so we might have to ask for that, but that's where we're at right
Thanks. Running short on time, so any quick questions?
So, but I can't let this go, and it's just gonna be something we can talk about in more detail. I wanna talk about the zero tolerance, and I know it's business safety, and I know because your staff there are the priority. I just wanna kind of examine it versus some real more restorative practices for people who self-medicate. Because as this data shows us, there's mental health disorders, 48%. This is the people that stay longer than the 24 hours. We have developmental disabilities. People said they have 20% people say they have that. 44.4% claim physical or have physical disability. And disability, as the law defines it, is a disability of any condition of the body or mind or impairment that makes it more difficult for the person with the condition to do certain activities and interact with the world around them. I mean, if that's not a person who's experiencing houselessness, I don't know what it is. And so we're also recognizing they're not getting, people aren't getting medication, or they are, needed to go through the sword, to receive medication through other ways. So if they're self-medicating and they're trying to live and cope, I think we can look at some policies that have a little bit of a non-zero tolerance that still holds accountable
now.
to the people in the safety that's inside of the shelter as clients, no, as staff. And I absolutely am very aware and cognizant of the compassion that's needed. I just want to really sit with how trauma represents itself and how it talks to people and how it speaks and how it is also as an understanding of how we can really kind of maybe allow for some of that and tolerate some of those. And there are practices that have those embedded in policies that we have. We can look at with an example. But yeah, I just want to say that because I couldn't think of. I'll talk a little bit.
I mean, I have an opposite in the sense of, I do think it should all be trauma informed. But when you're talking about the numbers that you have, that there are some real concerns for safety and for the stress that it creates.
Attention,
I
library
probably would
patrons.
have felt.
The time is
similar
7:45 and the library will be closing
if
in
you
15
hadn't
minutes.
involved.
No new library cards will be
Heartland Radar?
issued tonight.
Because what I
Any
know.
children or teens needing help calling for a ride home should go to the children's desk now.
Like.
Public computer
medical
sessions will end in
detox
5
And
minutes.
different.
Please
things that
bring anything you
address
plan to borrow
that
to the
substance
nearest
issue.
checkout station at this time.
And
Thank you.
so. There is some part where we have to, in my opinion, err on the side of the collective over the individual. While using all sorts of trauma-informed care. But I really do support your approach of getting right at.
We have Radar there 3 times a week, accessible to everybody. And we encourage people to meet with them, to talk with them. We just have to go from being a reactive and to being proactive. And so, and we're doing it. We're doing it.
You're not requiring sobriety.
No.
And you're giving access, I mean, you'll have our case managers from Heartland there, and we do extensive MHA services every single day. So there's gonna be access to a lot of options, and I think it's a step in the right direction. Obviously, no tolerance on anything stored on the premise, and I'm so glad that you're doing that, because that is a very huge liability. So, I mean,
It's difficult, and I said it earlier, the incongruence of being able to be in an addict and coming there under the influence and being expected to not use it. And then you're coming in for the night. So that's what's difficult. So I understand that we do it. And the first thing we do is not to say you have to go. It's to say, hey, that can't be here. And if somebody says, oh, I'm so sorry, there are allowances made, but that's usually not what happens.
Yeah, and I think as we're developing that policy, we can
Absolutely.
other range, and I don't think we're disagreeing or
No,
enough to support people. I think that there are a multitude of ways that we can go about creating a policy that looks to be, trauma informed survivor center too, a healing center. So, that's just kind of where I wanted to stay and sit with that, and share out. Yeah.
Thanks, Christine.
I just like, you know, on that same subject to say, and I don't know what the answer to this is, but I do know that a year ago, we didn't have the TRC in place. And today we do, and I wonder if we're still learning how to use that
They just, I just talked to them.
in situations like this. I know my experience with winter emergency shelters, when you didn't have that, it was either jail or it was the emergency room. If you called the police, you hesitated to call the police. Right, but with that kind of service available, I just wonder if down the road there aren't some better alternatives for those situations where I'm sorry, but I can't allow this. I just can't. I like the term, low barrier is not no barrier. So we got work on this. We gotta work on this, for sure.
And it takes time to shift the culture and, it's just gonna take time.
It's gonna take time. Yeah. Almost everything we're doing now is different than before. Right. Almost everything is different than before, which is not a bad thing. Gonna take time.
All right, anything else? I'd say unless there's something critical on operations or advisory committee, we just table that till next time. Jump down maybe to motion to adjourn. Anyone?
And to adjourn.
All right,
Second that motion.
all right. Motion's been made to adjourn the meeting at 7:49. Any discussion of the motion? All in favor, say aye. Aye. Any opposed, say nay. Motion passes. Thanks, everyone.
When you want to sign that, you can bring a copy with you.